it should stay in the lower half of this candlestick and then drop down and attack that sell side right there. So there's all kinds of trades here, but if I'm forcing myself to operate on the basis of just the fair value gap, you got to wait for the fair value gap. So if you looked at this wick here, that's consequent encouragement of that wick halfway. So using the middle of the order block there and immediate rebalance, trading down to that, that's something that's tradable. It's not something that I like to trade. Obviously, you guys see I trade pretty big ranges, and the targets are not like 10 points or something like that. But I'm going to try to find something before we close the session. I promise you, I'm not closing this session down until I push the button. The initial 15 handles or 20 handles, that's kind of like what I want to see Caleb try to trade with. If he can't make at least 15 handles from it, I don't want him to be trying to take a trade in it. And if we get the formations that I'm outlining for him, I'll explain to you what I'm looking for, why it's viable. Because if it can't make at least 15 handles, that means that 20 handles should be easy to see for my target from where I'm trying to get in at. So from target to the entry, there should be at least 20 handles run in between there. That should afford me the opportunity, or by theory, it should afford him 15 handles as a profit objective. I don't like the 10 handle stuff. I mean, you can if you want to do that, but if you look at price action, 10 handles, for some of you that are probably wondering what that is, that's this. That's 10 handles. That's static. That's static price action. Like it could just be moving around inside of a small little consolidation and got not even going anywhere yet. And that 10 handles, you can get stopped out and be right if you're just trying to trade in, you know, consolidations or time distortion, which is basically what we're seeing here. This is all time distortion, which is means you have to sit and wait for them to give you something obvious. And right now it's not obvious. So you wait. So it would need to do something like this. Give me a move that affords me, or him specifically, but while I execute in front of you, it has to give me this much range potential, because I could still probably fancy dance and get 15 handles out of that, and still, if even if the trade turns around, I should be able to take 15 out of that. But 10 handles like that, when you have a market that's moving around like this on a day by day basis, it's kind of like it's not worth it. It's kind of like it's not worth it. I'm not going to sit in front of the charts just to get something like that, because the risk models that are associated with that in a market like NQ, you have a high degree of probability of getting stopped out with just that much movement against you, and you can still be right in the direction, but you have to afford yourself a measure of risk. And 10 handles for 10 handles, it's just that's not what I want my son to do. Let's just put it that way. So we've taken out the sell side here. Now here's the order block. This could become reclaimed order block, bullish, and run for the buy side here. I like this. If we can maintain that, it evaporated here. So let me get this out of the way. Get this out of the way. All right, so Caleb would have a low that's taking out that low over here. And then we have this low that was taken out here. And we have clean highs, an undelivered half midway between the opening range gap high and low that has not been traded to today. I'm drawing this, the gap's not there. I'm just saying if it closed now we have it. This candlestick's low that candlestick's low to these equal highs. That is definitely what? That's enough handles, right? And you start the clock from the time of entry. What time did you get in the trade? How much risk? This is the candlestick number 2. Stop goes below it. Here's your target. And you just watch. If it stops you out, you write down how long it took to get stopped out, how much drawdown you took on the trade that would be monetized, how much money did you lose, then how fast did it take, if it gets to your target, how fast did it get there? And you do this as many times as you can afford to do it in your study, that's all. The lower time frames will give you more opportunities so that we can do a lot of these types of exercises. It's not a matter of being right or wrong. It's a matter of desensitizing yourself to it. You don't want to be in here trying to be accurate on every single one because it's not realistic for you, Caleb. You don't know what you're doing. You're testing the theory. It's already tried to go lower by taking this low out here. This low was taken out here, but this low did not take out that low. And we have clean highs that could be easily trailed to for buy stops that are used to more or less to protect the people that are short. So all the movement here, anyone that's short up in here or shorted there, that's actually a nice one. As the market went lower, they created these smooth highs here and they took price below here. So traders that use this as a sell stop to get short, their short position is triggered to get them in when it went below that low right there. So retail's thinking that it's going to keep going lower because they've watched what?